It is scary how unprepared we are for something, and you know what it is? The world economy is teetering on the edge of a recession, and the only thing that's keeping it afloat so far is the consumer spending spree after the pandemic. But Robert Kiyosaki's conversation with Raoul Pal a couple years ago will give you a whole new perspective on what to expect, because it shows you that we're overdue and underprepared for a major economic slowdown. Take a look at what he said, because it's more relevant than ever.
The date of today is an important date. And the reason that's important is just yesterday at Davos, Switzerland, the IMF stood up and said the world economy is heading into the worst economic headwinds since World War II, the worst. And that's why it could be bad news, but depending on how you look at it, it could be very good news.
So why World War II? World War II was a fascinating period, because like COVID, the entire world had basically been stuck at home or been on battlefields. Everyone came back. There was no supply of commodities and goods. Global supply chains were broken, and everybody came back and started consuming again. And guess what? Inflation went up to 13% or something, maybe even higher. And that period was fascinating because interest rates went up, and the first thing that happened was the economy went straight back into recession, and rates and inflation went negative because it was a massive tightening of monetary conditions. You raised the cost of goods on people and didn't raise their salaries enough. People couldn't get the goods that they wanted, exactly like now, and everything collapsed. So we went back into recession, and then eventually some better times. And I'll come back into the 1940s and 50s because I think it's a really important parallel that most people misunderstand. The next time we saw anything remotely like this was 1974. A lot of people tell you it's the 70s again, inflation. Well, the inflation episode we had in the late 70s was driven by demographics. That was the baby boomers entering the workforce all at the same time. It was the largest demand shock the world had ever seen. And we had a supply shock of this oil crisis of the Arab oil embargo. That's not repeating now. What is actually more similar is 1974. 1974 was the Arab oil embargo. The price of oil tripled, and interest rates went up, inflation shot up, and the immediate effect was the economy went down the toilet.
Now, this should tell you one thing that even the people doomsaying on the economy will ever tell you. It's not just economic distress that can trigger a recession, but also the slowdown of an unusually high period of growth. By any metric you can measure, the last 30 years in human history have seen a kind of economic growth that is unparalleled, and it was mainly driven by three things: new internet-based technologies, the rise of China as a global manufacturing engine, and the globalization that was eroding national trade boundaries across the world. By the way, subscribe to Money Mastery and hit the notification bell because you can't miss these vital, timely info like this. Now, the truth is that over the last 5 years, all of those three major drivers keeping the world economy buzzing with activity have started to slow down, and as impressive as new tech is, the pace of innovation is not the same as it used to be because we've reached a point of technological plateau. On the other hand, China's incredible growth that pulled most of the world with that rising tide has also slowed down to a more reasonable number. Around 2 decades ago, the Chinese economy was growing at over 14%. Today, that hovers around a more modest 5%, and it makes sense, right? A massive population and a lot of headroom to grow meant China was speeding ahead into the world's largest economies for the last 3 decades. And then, of course, we know in the past 5 years how the third pillar of global growth has been also knocked down with wars and pandemics that have massively eroded the efficiency of global supply chains. And on top of that, there has also been more of a political impact with more populist, nationalist, and trade protectionist leaders coming into power that are retreating their economies into themselves more. All of that means the world economy doesn't have a strong leg to stand on at the moment, and it can all only end one way, sooner or later.
Okay, so what's going on here? Why does this phenomena keep happening? Everyone extrapolates inflation out forever. What actually happens is that consumption falls because we've tightened monetary conditions. So tightening monetary conditions to ordinary people means the cost of your mortgage has gone up at the fastest pace in history. Over a 1 year period, mortgage rates have never risen this fast. So any money you borrowed has suddenly got much more expensive. Your wages haven't kept up with the cost of just basic services like food. So you're actually feeling poorer. So you can't consume as much, and you start not consuming other things. People overextended on housing because they rushed into housing in 2020 and 2021, and the rates have gone up for them. Also, just the rise in things like the cost of oil has meant that gas prices, all of this stuff, and then the rise in the dollar, which is a monetary tightening. All of these things get together would suggest, and I put them on a chart, it suggests that the ISM is going back to 30, which is as it was in 1974, which is a terrifying fall.
And that's the other side of the coin. The slowdown of growth and production would be bad enough, but imagine how the impact is exaggerated when people just start to consume less than they used to. That could be for any number of reasons: becoming more fiscally conservative, not having enough disposable income, or just having their purchasing power eroded with the tidal wave of inflation. It just so happens that right now, all three of those factors are driving a slowdown in consumption. And to top it all off, this crisis of economic slowdown is happening at a time when the euphoria of the last 20 years has created a financial culture where almost everyone has way overextended themselves financially. They take on excessive consumer debt, expensive mortgages, decades-long student loans, and a habit of living off credit cards that charge some of the most offensive interest rates for a financial lender. As Warren Buffett once said, "Only when the tide goes out can you tell who has been swimming naked." It turns out it was most of us because of global financial crunch that left a lot of people vulnerable to the point that a third of Americans today can't even afford a $400 emergency. Credit card debt is more than $1.1 trillion with a steep rise after 2020. And then there's a whole host of other kinds of debt squeezing people's monthly budgets enough to slow down their consumption. A study last year revealed that on average, when someone's debt to income ratio increases by 1%, their consumption decreases by nearly 4%. This is the quicksand of debt that most people can only get out of if their incomes increase and the world economy speeds up. Unfortunately, that doesn't look like it's going to happen since both consumption and production are locked in a downward spiral, making a period of recession almost inevitable.
Everybody's looking around you themselves saying, well, what's going to break? When stuff like this happens, the market goes down, something's going to break. We're looking, what bank is it? What hedge fund is it? The actual answer is, it's the economy. The economy has just broken. And the Fed are going to have to pivot.
And that's what the IMF is saying in
Correct.
Davos yesterday.
They're saying, and it's dead right, the monetary conditions that we've imposed on corporates and people is the biggest tightening in all history.
Wow.
We've also got China slowing down very fast because lockdowns, but also they've been in recession. So we've got and Europe with a war and having to deal with this energy transition. So we've got no leg of global growth here.
Well, obviously, there's no way to tell what sector, industry, or big corporation is going to fall as the first domino, but that doesn't mean that there aren't potential candidates. If you've been watching the markets closely for the past 3 years, particularly tech stocks and startups, you see a kind of overvaluation brought about after the excitement around artificial intelligence, and it has landed a lot of the largest names in business into a bubble somewhat along the lines of the dot-com bubble right around the commercialization of the internet nearly 30 years ago. But people are not finding out that AI is going to be more of a disruptive force in the short term than purely a creative one. There will be a lot of economic turbulence before these game-changing new technologies can be absorbed into civilization, and the people who realize they are starting to pull their money out of the market, and that's usually the first sign of a broader panic about to set in.
I look at the emptying office spaces because people are not going back to work. I mean, this is not an ordinary recession. The Apple says they're not going to go back to work. Look, all the office buildings empty. And, residential real estate depends upon jobs. Do you know what I mean? If you're saying recession means a loss of jobs, which Amazon's laying off, what happens to real estate wherever they have an Amazon office? So this is the ripple effect, which is why I'm saying, May 23rd, 2022, so it is, I don't remember where I'm anymore. That was one of the biggest announcements I ever heard, that the IMF is saying the world faces one of the biggest economic challenges since World War II.
And here's why that's scary about what Robert said here. It's that these factors still exist today as much as they did 2 years ago, except they've ballooned into much larger problems, and that balloon has not yet popped. Perhaps it's only a matter of time until something sets it off, which means people that can foresee it still have time to prepare. But let me know in the comments if you agree, and share this clip with friends and family, because timely info like this could save them a lot of trouble down the road.